Hi, everyone. I'm Mike Maloney, and Adam Taggart is with me once again. Adam, how are you doing?
I'm doing just great, Mike. Really happy to be back here with you.
Great. One thing I wanted to say before we get started is that GoldSilver is doing a silver giveaway. We've got a 100-ounce bar, a 10-ounce bar, and a 1-ounce bar for a total of 111 ounces being given away for free in a sweepstakes. So stay tuned to the end of the video because that's when you're going to find out how you can get a chance to win this silver. So I sent you a bunch of charts, Adam, and I just wanted to go over these just because the White House was all proud to announce that last month we had 0% inflation. And I guess the cost of fuel has gone down enough to offset the other price rises this month. But we are by no means done with inflation yet. And I'm going to go through some charts that show the reason that we are not done with inflation unless we go into a severe recession and velocity slows down so much that it compensates for the amount, the quantity of currency that is out there. And so this first chart I wanted to show you, I've got on the bottom, the blue line is the checkable deposits held by the bottom 50%. And so this is, that's half of the nation. And that is the currency that is going to end up showing up in grocery stores and at the gas station. The green line is the top 1%. And then the red line is all demand deposits at commercial banks. So this excludes money market funds and any deposits that are at your brokerage house. This is just in commercial banks, but it does include all businesses and such. The reason I wanted to show you this graph, it goes from 89 up to 2008, is because in 2007, 2008, the total quantity of currency that was held by the bottom 50% in their checking accounts was almost the same as the top 1%. They were both holding around $20 billion in their checking accounts collectively. And then I want to show you the bottom 50%. So this is what's in the bottom 50% of the wealth percentiles of the country. And you can see that I did a video on that, I don't know, a month or two ago, and it exploded from late 2019. And it is up from late 2019, it is up 2.8 times. And from that bottom in 2007, it is up 26.5 times more currency sitting in their checking accounts. It hasn't come out yet, even though last month we had 0% inflation. This is the currency that is going to come out eventually, and it will chase things like groceries and gasoline and all of the goods and services in society that people use. And then when those prices go up, the cost of living goes up. So those businesses have to then give their employees raises, which makes their cost of business go up, which means they have to charge more. And so there's a spiral that takes quite a while to go through for all of this excess cash to get sucked up. Any comments on this, Adam?
Yeah, so this is just classic monetary inflation, right?
Yeah.
You look at this and you see that I was interviewing economist Steve Hanke on my program not that long ago, and he brought up the equation, the quantity theory of money, which I know you and I, Mike, we were trading some messages before filming this. And this formula is what allowed Steve Hanke to basically predict 9% inflation back almost a year before we hit it. And it was simply just looking at the massive amount of new currency that was being created by the Fed and plugging it into that simple quantity theory of money formula. Because it basically has four variables, and we know what three of them are. So if you just add in the new higher value of the money supply, well, you end up getting like 9% inflation. And so back when that seemed like a crazy number to people. He said, look, this is just what the math is telling us. And he says, using that same formula going forward, he still sees CPI of like 6 to 7% throughout 2023. So he's basically saying, the CPI that we're seeing right now, yes, it might start coming down a little bit, but it's not going to come down a lot for a long, long time from here. And it's just a classic example of the pig through the python. You shove a big enough pig into the python, it just takes a long time to make its way all the way through the tail. And that pig was so huge that we still have it in the system. Even though we see troubling signs like consumers, revolving credit beginning to go through the roof again as people are charging more and more on their credit cards and stuff like that, there's still enough of this liquidity sloshing through the system that's going to keep the inflation problem going for much longer than I think most people realize.
Yeah. For anybody that doesn't know the equation, first of all, this was Milton Friedman's personalized license plate. I don't know if
that's right.
But it's MV, M times V equals P times Q. And so you have the money supply. He called it the money supply. I call it the currency supply, times the velocity, how many times the currency circulates. And we're going to get to this. This is the last chart I'm going to show. Equals the price level times the quantity of goods and services. So that's basically GDP. Moving on to the next chart. What I have to do to make the next chart fit into this same chart, I'm going to also show you the 1%, the top 1% of the wealth percentile. But to do that, we've got to squeeze the scale away, expand the scale and squeeze the bottom 50% way down.
How depressing is that?
Huh?
How depressing is that?
Well, that's true. That's sort of what happened. They squeezed them way down. And what you see here is that this green line is the top 1%. And remember that it was almost the same before the crisis of 2008. It was very, very close. That was that first chart. And here you see that since the average of 2015, 16, 17, 18, the average in that area, if you take the growth since that average, it's up 6 times, sixfold from where it was before the pandemic. Now, if you take it from that average, the top 1% in their checking accounts, they have 6 times more currency sitting there than they had back in 2015, 16, 17, 18. But if you go back to 2007, their wealth that's sitting around in checking accounts is up 111 times. Now, the thing is, they don't measure the stuff that this isn't going to chase. They're going to buy the same amount of groceries as they did before. They're going to buy the same amount of gasoline. What this excess currency is going to chase is assets. And I believe that, they see the stock market's falling. They see that everything is overvalued, and they're going to look for stuff that's undervalued. So I think you're going to see farmland and other assets. This is going to flow into wealth-preserving assets like precious metals. I think that a lot of this 0.33 trillion that is in the top 1%'s checking accounts come out and look for something other than more groceries and more gasoline. And then the next chart after that, I add demand deposits to it, the red line. Demand deposits are just all instantly available deposits that are in commercial banks, not in the brokerage houses. It doesn't include money market funds. And here we're up at almost $5 trillion. And this includes businesses and such. But this will also come out and seek safe havens and assets that aren't deflating from a stock market crash. The chart after that, I add the currency component of M1 plus those demand deposits. So this is the cash in circulation, which can also come chasing things like gold and silver. The cash in circulation also buys groceries and things like that. But, we used to have in 2008, we had about $1 trillion of cash in circulation, and now we've got about $2 trillion of cash in circulation. And so there's basically $7 trillion out there, and $6 trillion of it has been created since Ben Bernanke started the QEs, and 3 trillion of it or more has been created since the pandemic, about 3.5 trillion here. So all of this, some of it needs to come out of these checking accounts until people are comfortable with the balance that they've got in their checking accounts versus their level of anxiety about the economy. If the level of anxiety is high, it stays in the checking accounts. We don't have raging inflation. But if they start feeling good again about anything, then prices will soar, which brings us to this last chart here. And this last chart, what I did was I took the velocity of M2 as calculated by the Federal Reserve. That is the red line. And the scale is on the right side. And then I took the size of the currency supply that they claim. This is M2. There used to be M3, but they hid it from us in March of 2006, saying that it was too expensive and difficult to compile, and nobody used it anyway, which was a bunch of baloney because it was the most used aggregate of the currency supply. When anybody wrote about the currency supply, they used M3. But M3 started, they inflated M3 hugely right after they hit it. And it was not that difficult to compile. So anyway, what you see here is everything in balance with what I've done by dividing the size of the currency supply into the gross domestic product, the blue line, you've got how many dollars are chasing how many goods and services. And I believe this is actually the way that the Fed calculates velocity. But it shows you the number of units of currency that is out there for any given at any given moment for the amount of goods and services available in the economy that they measure as the retail sector. They don't measure those financial assets. That's not part of the calculation of all of this. But what you see is that if you look at the blue line, everything was fairly stable. When it goes down, it means that either they are the GDP is growing faster than they are printing currency. And so there's more goods and services available for each unit of currency. Once it starts to go up, and you can see that in 2001 it reversed and the blue line starts to go up, it means they're creating currency faster than we're creating new goods and services, products. And thus the velocity falls to sort of suck up that excess currency. And it fell off a cliff that the size of how far it fell off a cliff in the year 2000 should have sucked up all of the inflation. Prices shouldn't be going up. What my analogy to this is that imagine the grid work of a city. You've got all of the streets and you've got parking lots. And everybody goes to work in the morning and there's traffic, and that traffic is prices basically. And then everybody parks their cars and there's fewer cars on the street. Well, the Fed has just quadrupled the amount of parking lots and cars that are now going to try and hit the road all at the same time someday. We don't know when all of this is coming out of checking accounts. But the reason that red line fell or the blue line went up, they created a bunch of currency, but it's parked. It's still parked. So it isn't part of what is determining prices by that formula that Milton Friedman has. The V portion of that formula, velocity, has fallen to neutralize the amount of currency that they created, but it wasn't quite enough. But there is still a lot of inflation in our future. People need to watch episode 7 of Hidden Secrets of Money to really understand this, because it shows that when there's anxiety about the economy, everybody saves, and velocity slows down because the currency is parked. So any comments on that big, long diatribe I just did?
Well, first, thank you for the graduate level walkthrough here. This was fascinating. And in many ways, Mike, I think these charts really make one of the best arguments that I've seen lately for precious metals, which is you just have this massive amount of new currency that is in the system. But like you said, its velocity is relatively low right now. But at some point, there's going to be a trigger that is going to push that into the real world. And one of those triggers may be the fact that we were just talking about how the CPI is likely to remain a lot higher for a lot longer than many people expect. And so those people sitting on that cash are going to say, look, I'm getting negative real returns here. I should be putting this cash into something that's not going to get eroded by this, persisting inflation. And given the volumes here, only a little bit of that needs to go into the precious metals markets for those markets to go pretty bonkers, correct?
Yes, right. There's small markets, and one day there will be a lot of capital chasing. I did a video on how many times what the price of silver would be if it had kept up, if it was in the same bubble that it was in 1980 against all of the other asset classes. So I took the growth of those asset classes from 1980 to today and applied it to that $50 silver high. And right now, the lowest one by far was the CPI. And it says today that it's about $190 an ounce to equal that $50 high. But that was the lowest one. Everything else came out to a few $100s to about $3,000, which is ridiculous. It's not going to go to $3,000 unless we have a hyperinflation and the value of the dollar drops so low. Yeah. You have to watch episode 7 of Hidden Secrets of Money for all of this, and then you fully understand it. But gold and silver, everything points to somewhere between like 10 to 30 times more currency trying to land on a pile of metal that has only doubled since 1980.
Wow, right. And your lowest projection there, the CPI one of 190 or whatnot, and that by itself is basically 10 times more than what the price of silver is today, right? So those are tremendous increases, and it's making me much more interested in hearing the details of the sweepstakes that you just mentioned, so I can get myself 111 extra ounces at what seems to be an incredibly deep discount today. Hey, moving on,
Mike. We'll get to that at the end of the video, but I do want to say you mentioned, the loss in purchasing power that people are experiencing from inflation right now. If you have 2 years, if you have a year of 10% inflation, the value of your currency in your savings account, every dollar is now 90 cents of purchasing power. Another year takes it down to 81 cents. And so, the first year, what used to cost you $1 now costs you $1.10. The second year, it costs $1.21 for that same thing that cost you $1 2 years earlier. So that's how fast it is eroding at these current inflation levels. They were saying 6%, 8%, but the CPI isn't the CPI anymore. It's the CPI. And so really it's been 10% or more when you really look at the cost of things. So anyway, this announcement from the White House and the Bureau of Labor Statistics that there's no inflation last month, that is a very temporary thing. And, we were discussing this privately, and the White House is trying to redefine recession. So they don't have to admit that we're in a recession. And we're getting to this point where we can't trust anything that is said about the economy except for trying to measure real numbers. Do you agree with that? Do you think that we've gotten to the point where they're fudging the numbers and stuff and lying to us?
Well, absolutely, sadly. And, I think a lot of that's the extent that government will stoop to when it's backed into a corner. And clearly, at least with the current administration, they're looking at the midterm elections coming up, and things don't look so good for them. And so obviously they're just trying to diminish anything that could be used, negatively against them as people are actually on their way to voting booths. But as I've long said, actually, it doesn't matter what they call things anymore. It's how people feel what's going on, right? And I think more and more people are, and their daily experiences are saying, you know what, I'm falling further and further behind, right? My cash is buying less at the grocery store. Fuel bills have been insane. Either trying to make us cheer the fact that inflation's coming down because it went from 9.1% CPI to 8.5% CPI. I mean, 8.5% CPI, even if that were accurate, and you're correct, I think it's substantially higher than that, is still a ferociously horrible inflation problem. So, there's that old saying, and pardon my French here, don't pee on my leg and tell me that it's raining. I think more and more Americans, and honestly, people in other countries around the world, are really beginning to feel that towards their governments, where they're saying, look, what you're telling me is not matching my daily life experience here. And so, as you and I have long said, Mike, we can't expect the government to ride to the rescue here. We as individuals are going to have to take our destinies into our own hands.
Yes. So, and we're nearing the part where we're going to tell you how to win the silver. So stick with us. What have you got next for us, Adam?
All right. Well, Mike, we have a tweet of the day. And this, again, too, is sort of about how, the world is changing around us in ways that I think a lot of people don't yet quite realize how important some of these steps are. But there's a really big development happening on the geopolitical chessboard right now between Russia and Iran. Do you want to take it here?
Well, yeah, Iran is in talks with Russia to join the mirror payment system, which skips the SWIFT system that the U.S. has always controlled. So weaponizing the U.S. dollar was one of the big nails in the coffin of the global dollar standard. And, we are headed for a change in world monetary system. It'll take a while, but as it goes along real slowly, it's going to speed up at the end and everything will change all at once. And when it does, this is, we're going to experience a shift that is going to affect everybody on the planet. So wealth will either be transferred toward you or away from you. And the choice is yours, depending on, it all depends on your level of education about it. You've got to know what's going on and how to protect yourself. So, yeah.
And just to that point about education, Mike, you mentioned this earlier, but this is why I think going back and rewatching Hidden Secrets of Money is so important for the viewers of this video. And gosh, if you haven't seen it, folks, definitely go watch it for the first time. But it's because, there are steps being taken right now that we may think are giving the U.S. a short-term tactical advantage. But as you said, Mike, it's driving the other players on the geopolitical board to make decisions that are going to eventually accelerate the end of the dollar's dominance of the world reserve currency. And the reason you're so confident in saying this is because you've seen this play out again with currencies multiple times in history. That's what Hidden Secrets of Money is all about, right? I mean, this is really nothing new in the grand scope of monetary history, correct?
Right. But, the last shifts in global monetary system, there have been 3 of them over the past century. The average person didn't feel. It was only felt by the big banks, international companies, and the central banks. The shift, we had the classical gold standard before World War I. It broke down during World War I. And then there was a conference in 1922 called the Genoa Economic Conference, and they came up with a new world monetary system, the intra-war gold exchange standard. And then that started to fall apart during the Great Depression. We had World War II, and then an economic conference called the Bretton Woods Conference in 1944. We went on the Bretton Woods system, these are completely different global monetary systems. And that went along until 1971. And there was they held an economic conference called the Smithsonian Agreement, which didn't work. It fell apart immediately. And the dollar standard was the default because all other countries had been flooded with US dollars due to the Bretton Woods system. So everybody was holding dollars the central banks were holding it as a reserve currency. And that's how we ended up on this system that gives the US a tremendous advantage. Once we lose this advantage, we're not going to live at the high levels of prosperity that we've lived at for so many years compared to the rest of the world. and it'll be a rude awakening for Americans. But these were all baby steps. You had a full gold backing to a partial gold backing of roughly 40%, to a gold backing that wasn't really specified under Bretton Woods, and it fell to about 8% before Nixon had to take us off of gold because the U.S. was going to run out of it. There was an international bank run by central banks on our central bank demanding gold. And we lost half of our gold from the late 50s to 1971 when Nixon closed the gold window. But each time there's this emergency economic conference. So we've gone gold, partial gold, less gold, no gold. What is the next shift going to entail? Is it going to be going back to something from nothing? If that is true, then this is going to be huge, and everybody on the planet is going to feel it. It's not going to be like the other transitions that were baby steps. This is a giant leap.
All right. Well, look, one of the big questions that people are wrestling with right now who get what you just said, Mike, is it's a giant leap. We're entering into, a brand new era, a new paradigm shift. There's going to be a lot of change. What is that future going to look like? How do I make sure that my wealth isn't destroyed, as those changes manifest? And what steps should I be taking today to position prudently for it? If I can just take a second, I feel like we're sharing lots of great, potential promos for folks in this video. I just want to take a second to quickly announce the upcoming Wealthion Fall Online Conference. You're going to be a headliner at it, Mike, and that's next month, as is Jeff Clark, who's well known to this audience. But we're also going to have just a murderer's row brain trust of some of the top experts in money in the markets to help people make sense of how things are shifting and, more importantly, where things are going and what they should be doing today. So we've got folks like Lacey Hunt, Lynn Alden, Matt Taibbi, Grant Williams, Stephanie Pomboy, Rick Rule, Alf Peccatiello, Doomberg, just a ton of domain experts to help make sense of this for people. If folks want to find out more about that, just go to wealthion.com/conference. We just opened up registration to the general public, and folks that register now can get the early bird ticket discount. It's almost a 30% discount on the ticket. So anyways, Mike, super excited that you're going to be speaking at that.
Well, thanks. I'm really looking forward to hearing all of the other speakers. Your conferences are always so incredibly informative. And when I listen to other people, very often it sends me down other roads that I investigate then. And, I sort of look at my job as connecting dots and taking what is there and explaining it to people. That's my job.
That's actually my favorite part of the conference that you put your finger on, which is listening to the speakers basically get inspired or triggered by something that one of the other speakers says, and then they, that helps them advance an entirely new and super interesting, new topic into the conversation. So that sort of popcorning off of each other's brilliance is such a fun thing to watch happen in real time. And folks, that the date for that conference is Saturday, September 24th. Yes, Mike, we've got viewer feedback to head to. We've got two great viewer comments here. Let me read them and let you react to them. The first one is from Sophia Victoria, who's only just 16. She says, I'm 16. I just came across the hidden secrets of money and have started really educating myself on the cycles and patterns of the economy and propaganda. Man, good on you, Sophia. Considering we're on the brink of something so big and most aren't prepared, what are some things we can do to make this crash slightly more bearable?
Wow. That is a really big topic. And for most people, they can't just suddenly go out and buy a farm and put in security and solar and all of that kind of stuff. But, we all have to do the best that we can. And so for me, it was the first step. Before I did anything else, I just collected precious metals. That's what I did to get ready for this, because I sort of saw this coming after the crash of the NASDAQ. I started studying the economy when I read monetary history, and then started figuring out some of the fundamental things about economics that it doesn't seem like the economists know, most of them. Then with those two things, I started getting ready for something really big. I thought it was going to be the 2008 crisis, but they papered over that. But they did such a massive paper job. And now that wallpaper is peeling and exposing all the holes and cracks in the wall. And so I do think this is going to be bad but for the average person. I mean, I started with precious metals. You could venture out into cryptos that you think may do well under this if there is a rush from currency into other things. I do think Brent Johnson's dollar milkshake theory, though, is correct. And I think you're going to see the dollar rise for a little while before some big disaster, because it'll be the other currencies sort of melting against the dollar doing better than the other currencies. But at the same time, you're going to be seeing gold rise with the dollar because, all of that currency that I just showed you that was parked out there, it's going to be chasing something. And in the up until the end of last year, it was chasing the stock market and real estate. Well, you know what they've done with interest rates, so you know the future of real estate. Interest rates are too high they're raising them too quickly for the real estate bubble that they've created to go on and on and on. And the stock markets have been going down. I think a lot of people are going, well, we've had our big run. I'm going to cash out a little. That's probably where some of that currency that's sitting in the top 1% of the wealth distribution, that currency, some of it probably came out of the stock market. And that's the reason it's there. It's going to be chasing other assets. And I think gold and silver are going to be some of those assets, and farmland. So for me, that's where I started. I did venture into other things, cryptos after precious metals. And now I sort of have a straddle, is what an options trader would call it, where I've got a bet for the downside of the economy because I've been a crisis investor. I'm very worried about this, want to protect myself and make gains while everything else is just, tanking. So I've got my gold and silver, but once I reached a certain level, I also started betting on the upside of the economy as well. So for the first time, I've got stocks that are not precious metal stocks. I've told my insiders what it is. But for the average person, I mean, you got to do the best you can. And it's up to everybody to figure this out on their own. All I can do is provide as much information as I can on what I see going on with the economy and what I've done for myself. And the first thing I did for myself was I just collected precious metals only until I got up to a position where I was comfortable enough to venture into other assets.
All right. Well, I agree with everything that you just said, Mike. Sophia, to what Mike just said, I'd simply add, this is going to be the focus of the conference that I just mentioned. So you'll get Mike's continued thoughts on that, as well as those of all the other folks that I just mentioned that are on the faculty, including Brent Johnson, creator of the dollar milkshake theory that Mike just mentioned. He's going to be speaking at the conference as well. And last, Sophia, I just want to say, I've got teenage daughters, and I wish they were as financially aware as you are at 16. That is super impressive. Congratulations. You're an inspiration to all of us parents out there. All right, Mike, we've got one other viewer feedback here from a fellow who looks like you've influenced to take a lot of the steps that you just mentioned. His name's Gregory, and he says, 7 years ago, I came across your Secrets of Money, and it changed my life. It sent me down the rabbit hole in which I've created a situation in which I have created an environment, farm, cash flow, etc., in where I'm reasonably confident I can weather the storm and hopefully be able to help the people around me. Thank you. Man, that's just got to warm your heart, Mike.
Yes, it does. He's done some of the things. He mentioned a farm. And that's one thing that I've done is try. I've gone to an extreme. Most people won't do this, but I have no idea how bad it will affect the island that I'm on. And being an island, we're highly dependent on the mainland and the rest of the world for food. 85% of the food that is consumed in Puerto Rico comes from elsewhere. They only supply 15% of their own food. And so growing my own food was important, and having my own water source was important. And I've installed a bunch of solar. So I've got, I have a Tesla Model 3, and when I'm up there, I drive around burning sunlight. And so he's done congratulations is all I've got to say to him. I'm so glad that you could do that. And then one of the things is, you mentioned helping other people through this. And that's exactly what I plan on, is to try and help as many people get through it as possible.
Well, and Mike, I've been in the resilient space for years, literally over a decade. And that's one of the things that most people kind of in their preparations overlook. They focus on what to do to take care of themselves, but they don't think about all the people in their lives who are not preparing, who may show up on their doorstep in a crisis saying, right, I'm completely unprepared, please help me, right? So having that foresight to proactively prepare to be, a resource to folks in times of crisis, hugely important. All right, yeah. Mike, well, we're now at the point where you can share the details on how folks can claim those 111 ounces of silver. Where should they go?
Just sign up for the GoldSilver newsletter. That's all you have to do. So go to goldsilver.com, sign up for the newsletter. I believe there's goldsilver.com/newsletter. And you can win the 111 ounces of your name will be entered in an automatic, it'll be put into the bin. We'll electronically turn the bin, pick out a name, and somebody will be winning 111 ounces of silver very shortly.
All right, great, folks. And to easily sign up for that newsletter, if you haven't done so already, we'll put a link down in the description below this video, so you can just click that and go get your name entered. All right, Mike, and I think you've got one of your fantastic memes of the day left here, correct?
Yes, this is Keynesian economics, and it's exactly what they have done with the economy. It says, in case of nothing to do, break glass and then sweep up the broken glass. Well, the thing is, the government and the Federal Reserve broke the glass. We're the ones that have to sweep it up. That's the problem. I want to thank everybody for watching. Thank you, Adam.
Always a joy, Mike.
Bye.
At GoldSilver.com, we have a price match guarantee, free shipping, and global storage options. Get the best-selling book, Guide to Investing in Gold and Silver, for free at GoldSilver.com.